Welcome back, trader. Pedro here with another video, and in today's video it's going to be quite interesting, so make sure you guys take notes, make sure you have your pen and paper out, because I'm going to be teaching you how to find these important key areas in the markets, right? Key areas of resistance, key areas of support, and these areas are going to help you a lot to avoid a lot of losses. So if you're losing a lot right now, maybe you've lost a lot of challenges, trust me, I hear you, we've all been there before. So in this video I'm going to be sharing with you exactly how to avoid this and how to catch profitable trade opportunities at important key areas. Let's get started with this video. Let's begin with this lesson. Make sure you have a pen and paper handy, because I'm going to be teaching you exactly how you can implement this. Make sure you watch it to the end, because I'm going to show you something that's going to really help you a lot. And that really helped me, to be honest. So let's get started. So as you can see, I'm going to show you an example. This trade actually ended up going well over 100 pips in our favor. This is on CAD-JPY. So as you can see, the stop loss that I had here was only 15 pips, looking at targeting these highs up here. And so what are important things when it comes to finding these key areas? Well, first and foremost, I'm going to mention that you want to find areas that the market has reacted to, because sometimes there will be areas where the market reacts to it and doesn't do really much. So it just taps into a certain zone. Let's say, for example, over here, like this kind of consolidation area over here. I'm going to actually just kind of zoom in a little bit closer. So this area over here, and sometimes the markets won't have a massive reaction. You'll just see the market kind of tap into this area and then react a little bit. But it's always important to actually look out. So when you go to the markets and you start fresh, you want to always focus on areas where you see a massive reaction. This is a great example over here. We could see that when CAD-JPY tapped into this major area of previous level of support, it retested it as resistance, and we saw a massive downfall to the downside, right? And even these areas, you can see time and time again, these areas are respected. So I'm going to show you how you can do this and how this could drastically change your trading in a matter of minutes, guys, like just from looking at the charts, okay? So we're going to go back. If I were to put this on the 4-hour time frame, you could see literally we were at this area of support. So we were at a 4-hour area. So these areas that you see are all 4-hour areas that I have marked off. 4-hour, and some of them are actually daily areas as well. So you can see that we were at this 4-hour area right here. You can see in the past it used it as resistance. Over here we have resistance, okay? If we go back further a little bit more, you can see a little bit of resistance. But typically you don't want to go any further than 2 to 3 years maximum. So when you're looking for these key areas, where you want to focus on first is go to the 4-hour time frame, okay? Don't focus on the 1 hour. Don't focus so much on 30-minute or anything like that. You only want to focus on the 4-hour and daily. These are important key levels on the higher time frames that have much more significance when it comes to the markets, okay? And so typically what I like to do is I like to mark off these areas. So we have this area over here where the market has reacted to in the past. Like I said, resistance. You can see this wick over here. That counts as well. Support, resistance, and so on. Okay, that's more than enough. Honestly, you only really need 3 touch points and you're good enough, and that shows that it's an area that has been respected in the past. Okay, so that was an area where it reacted. Also here, if you notice here, we had a beautiful push to the downside. We were trending to the downside, creating lower highs and lower lows. And then what happened? When the market tapped into this previous level of support over here, right? Support, and we can go back in history again and look, we've got multiple areas here, support, a little bit overlaps here because it tapped into this other resistance, support, and resistance as well, support and resistance, and so on. Anyways, you can see it's well more than 3 points where the market has touched, and you can see here it reacted to this area and we got a beautiful reaction to the upside. Okay, now we're impulsing to the upside. Now we're waiting for the market to retest this other 4-hour area, which you can see it tested it over here as resistance, and so on. So what happened? Then I narrowed it down to the 1-hour time frame. We saw a beautiful break of structure to the upside. Okay, we know that at the back of our mind we've broken a 4-hour level, okay, and we're now retesting it as support. So it was previously a level of resistance. We're now retesting this level as support. So now what I want to do is let the market play. We're going to just play this out and see what happens. Okay, so give me 1 second here. We're just going to play this out here and watch what happens. So as the market starts playing out, you see that the market taps into this zone, okay, and we get a beautiful reaction. And as you can see, we had a beautiful take profit smash at about 100 pips at these highs up here. And you saw that the market pushed up, breaking out, retesting this area that was previously a level of resistance, retesting it as a level of support. We got a beautiful, it actually probably filled this imbalance in the market, and then it gave us a nice reaction to this area, right? I'm not telling you to buy exactly at this zone. Obviously, that could be for another video. We can focus on, fair value gaps and imbalances in the markets, but in liquidity grabs. that's another video for another day. Let me know in the comments actually if you guys want me to make a video of that. I could definitely look into that for you. But let me know so far if you're understanding this video, or if this video is finding you helpful, or you're enjoying these videos, because I will create more videos for you guys. There's lots more content. We post videos every single week. But with that being said, guys, if you're enjoying the video so far, make sure you smash the like button. It really does support the channel. So like I said, look at how price literally respected this area. But because you have to think about it this way, because in the back of our mind, we knew that this was a 4-hour area of structure, okay? Because it could flip at any time. It could go from resistance and then flip into support. But we knew it was a 4-hour area of structure that the market respected in the past. We knew that most likely if it broke it, it's most likely going to retest it. And if we get a reaction to it on the smaller time frames, there's a higher probability that the market's going to respect this area and give us a nice reaction to the opposite side, or the continuation side, right? And that's what we got. Beautiful 100 pip move and take profit smashed. So now let's move on to the clean charts and see how we can actually scope out these areas. So let's move up, like I said, daily, 4-hour. You could even do this on the weekly, but typically I like to just day trade. I don't really focus so much on the swing trading aspect of things. Really need to focus on just these main areas on the daily. And you can see right here, this is another area where the market is currently testing or retesting. And so what we want to do is focus mainly on kind of this zone around here. We don't want to focus, like I told you guys earlier, it's going way too far back into time, because it's just going to be not as relevant, okay? It's going to be more irrelevant. As further as time goes, the further the time goes, the further relevant it will be, and most likely the market will always break these areas. So what we want to do is, starting fresh, okay, we clear everything off. Let me remove the replay just to make sure we're up to date. You can see that currently this is January 17th. So this is up to date in today's date. As you can see, we also even rejected this area here. And what happened? At the moment the market slowly pushed back up from this impulse to the downside and it came back up, what happened? Look at this. It reacted to this area and pushed to the downside, right? And so this is what I'm talking about, right? So let's clear this off and see what other areas we could scope out in the market. So now that we have these two daily areas, what I do is up to the 4-hour time frame and see if these daily areas actually mark off or correlate with the 4-hour. Now look at this. Beautiful, guys. Look at this. Now what do we got? We got this beautiful daily and 4-hour area. The market is also respecting the same zone. Now let's look at this. There's another daily area being respected on the 4-hour time frame as well. So this is another beautiful zone, right? So this is how we're able to use two higher time frame confirmations that these are areas that the market respects, right? So now we have two different time zones that are actually two different time frames that are actually being respected here. So that's going to be quite significant, guys, showing that in the history, in the past, the market has respected these areas as areas of resistance or areas of support. You can see here, support, resistance, support, support, right? Resistance, and so on, right? And so if we actually kind of zoom in here, we can then anticipate potential moves or potential areas where the market's going to react at, right? So now that we know that every time the market came to these zones, this is a daily and 4-hour area, you can see rejection. We have rejection, rejection. What do we have here? A little bit of support here, right? What do we have here? Rejection here, right? Rejection, resistance, right? It's all the same. It's all relatively the same, right? So now look how many touch points we have, guys. We have multiple touch points in the market, indicating to us that every time the market came to this area, this resistance area here, there was a higher probability that the market would react to the downside, right? Now, sometimes the market will break above these areas, and then what do you use this exact same zone as? You then use it as support for potential continuation to the direction the market is telling you it wants to go, right? It's that simple. It's just a lot of times, a lot of traders, especially when you're new, you try to overcomplicate it and you overlook these areas or even finding these areas, and then it just gets confusing, right? So don't worry, don't stress out. If that's you, let me know in the comments below if you're struggling. It's okay. We've all been there before. I've been there myself. But finding these key areas will definitely and significantly help you with your trading, and you will notice the difference. You can implement this right now. And so when you're done watching this video, make sure you guys go on TradingView, make sure you look over your charts and try to find these key areas, right? Like I said, don't focus so much on the past, focus on current price action. So going back to the daily, focus within this kind of zone, like recent price action. So kind of anything really between this zone here, like I said, not going too far back, maybe, you know, the last year, 2 years or so as key areas. But that's about it, right? This is how you're able to find these important areas and verifying that, you know what, the market did react to this area here in the past, and this is why most likely it's going to respect it in the future, right? And you can go and continue on. Like you could kind of look, and we go down further. So we started from the highs where the market or price is currently at. And you can start going down lower, and you can say, okay, you know what? This is another area that I potentially see as an area of 4-hour area and a daily area, right? And then we can continue going further. Let's say this is another area down here, just to give you guys more examples. Look at this, guys. Why is this another area? Resistance. What do we got here? Resistance, right? What do we got here? Resistance. Support, right? Because it reacted to it. If you think about it, there was a point in time where the market tapped into this zone and then it went up. And so these are areas that we have to understand that the market does respect, right? So then we can narrow it down to the 4-hour time frame, and then we start realizing, we say, hey, you know what? This is not only just a daily area. This is actually a 4-hour area where the market has respected in the past. And sometimes it's going to overlap it. Then we just say, okay, you know what? This is actually more on this area. This is more on this zone, right? Or we can then focus on saying, okay, you know what, let me clear the charts. Let's focus maybe here on the 4-hour. This seems like a more relevant area right here, because this is kind of more, we have more taps in these zones. We have the market respecting this area much more. So we can say, okay, this is a 4-hour area, resistance, support. We have an overlap here. That's fine. Now we have resistance here because it went below, but it still respected it as resistance. We have support, right? And so on. Look at how much areas where the market respected this area as resistance, right? So, and every time the market came to these zones, what did it do? It reacted to the downside, right? Did it do? It react to the downside, guys. And literally that looks like not much if you think about it. But if you actually look at the bigger picture, let me kind of zoom out here. I'm going to show you exactly how many pips. So the market came up to this zone, okay, went up a little bit, like 20 pips or so to the upside, grabbed some liquidity, and then it ended up dropping well over 180 pips. If we look over here, the market tapped into this zone again. What went up? Look at that, 20 pips, and then came down, what, 150 pips. Look at this one here. Price tapped into this zone here exactly, so barely any drawdown, and then ended up going well over 335 pips. So this is how we're able to mark off these areas and understand how significant and how much of a change it can make in your trading. So I challenge you today, if you're starting out or you're struggling with finding these key areas, let me know in the comments if you're going to take this challenge and actually practice and implement what I taught you today. And let me know in the comments if you're going to start today. And honestly, you will see the difference. Trust me. Guys, if you enjoyed this video, let me know in the comments below. Make sure you smash the like button. Also, share this video with someone that it might help. And with that being said, guys, if you want to join my community, you want to be able to trade with me and my other students, make sure you check the links below in the video description. And with that being said, guys, thank you so much, and God bless you guys.